Something happened yesterday that the broader market is still not pricing in. THORChain, one of the largest decentralized cross-chain liquidity protocol in crypto, was exploited for approximately $10.8 million across 4 separate blockchains in a single coordinated attack. The protocol immediately halted all trading and signing operation. Its native token, RUNE, dropped 12 to 15% within minutes. We are going to break down this forensically, not the panic, not the speculation, the actual data, the actual mechanics, and what this event tells us about the infrastructure layer the entire DeFi ecosystem is sitting on. Let us start with what THORChain actually is. This because this matters for understanding why this exploit is as serious as it is. THORChain operates as a decentralized cross-chain liquidity network. Its core function is letting users swap native assets across different blockchains without wrapping token or routing through a centralized intermediary. You want to move native Bitcoin into native Ethereum without touching a centralized exchange? THORChain is one of the primary rails for doing that. The protocol native token is RUNE. It serves as a settlement asset in every liquidity pool on the network. Every pool is paired against RUNE, which means RUNE is effectively collateral for the entire system. When the protocol comes under stress, RUNE absorbs it directly. This architecture is important. Keep it in mind. Now, let us walk through what happened on May 15, 2026. The first alert came from 2 sources operating independently. Blockchain investigators ZachXBT and security firm PeckShield both identified suspicious fund movement across multiple networks simultaneously. This was not a single chain drain. The attacker hit Bitcoin, Ethereum, BNB Chain, and Base at the same time. ZachXBT initial estimate priced losses above $7.4 million. He later revised the figure up to at least 10 million after completing a fuller accounting across chains involved. He was explicit that some third-party reports circulating online had not verified the numbers independently, and he flagged those publicly. PeckShield on-chain breakdown identified the stolen asset as approximately 36.7 Bitcoin, valued at near $3 million, alongside roughly $7 million worth of asset pulled from BNB Chain, Ethereum, and Base. The funds were traced to 2 primary addresses, one on the Bitcoin network and the second one operating across EMV-compatible chains. The wallet linked to the attacker at the time of this reporting held approximately 3,443 Ethereum, 36.85 Bitcoin, and 96.6 BNB. THORChain's response was immediate. The protocol mail governance module flipped the trading halt and signing halt parameter to active. A node pause was initiated starting from block 26190429, running approximately 12 hours and 42 minutes. THORChain's own documentation described these levels of halt as an emergency control used by node when the protocol faces active threat conditions. As of this recording, THORChain has not published post-mortem. The attack vector has not been officially confirmed. What we have right now is on-chain forensic data in the protocol emergency response. The technical explanation is still pending. Now, let us talk about RUNE's price behavior, because that tells its own story. Before ZachXBT alert spread, RUNE was trading at above $0.5. Within minutes of the exploit report going public, the token dropped to approximately $0.50. That is 15% decline in a very short window. Some trackers at press time were showing the 24 hours decline settling around 12% as the price partially stabilized. But here is the number that matters more than a short-term drop. RUNE was already down over 70% year-over-year before the event occurred. This exploit did not create falling asset. It accelerated the pressure on the asset that has been under sustained structural decline for the last 12 months. That context is not incidental. It shaped how the market is likely to process any recovery attempt or post-mortem response from the team. Now, the layer that most coverage is not giving enough weight to. This is not THORChain's first serious incident, and the protocol history with illicit fund flow is documented at scale. THORChain has repeatedly appeared in post-exploit investigation as the routing layer attackers used to convert stolen assets between chains specifically to move funds from Ethereum to Bitcoin, where tracing becomes significantly harder. The documented cases are significant. Funds from the FTX exploiter, totaling approximately $124 million, were routed through THORChain. Funds from the Bybit hack, totaling about $1.2 billion, moved through the protocol. The balancer exploiter, responsible for approximately $120 million in losses, used THORChain to move funds. Most recently, in the KelpDAO attack involving roughly $175 million, assets were breached through THORChain within 36 hours of exploit, generating approximately $910,000 in protocol fee from a single incident alone. The protocol has maintained a formal stance of neutrality. It does not censor transactions. It does not freeze addresses. Its design philosophy is that network is an infrastructure, not a compliance layer. The position has a coherent technical and philosophical argument behind it. It also means the protocol has become a reliable route of sophisticated attackers. The current exploit is notable because this time THORChain was not just a laundering rail, it was the target. That shift in dynamics deserves attention. The broader context here is that DeFi bridge and cross-chain liquidity category as a whole. Cross-chain protocol faces structurally elevated attack surface compared to single-chain protocol. Every addition blockchain, a protocol integrates with an additional vector. The complexity of synchronizing state, liquidity, and signing operation across multiple independent chains create an edge cases that are difficult to audit comprehensively. THORChain architecture, which uses a network of nodes observing multiple chains simultaneously, is genuinely sophisticated. It is also genuinely complex. According to chain analysis data, cross-chain bridge and liquidity protocol have seen a cumulative theft exceeding $2.8 billion since 2021. THORChain current incident add to that total. It's also add to the operational history of protocols that were already under scrutiny. In January 2025, THORChain suspended its DolFi lending operation amid insolvency allegation and implemented 90 days validator-led restructuring process to address reported $200 million debt burden. The restructuring converted defaulted obligation into a new equity token structure. The protocol has been rebuilding operational credibility since that event. Yesterday's exploit is a significant setback to that process. So what are the data points to track from here? First, the post-mortem. When THORChain releases its technical explanation of the attack vector, that document will tell us whether this was a smart contract vulnerability, a node coordination failure, or something in the signing and observation layer. The specific mechanism matters for assessing whether the fix is surgical or structural. Second, loan prices behavior around the post-mortem release. Market will reprice based on what the team reveals and how credible the response looks. Watch the 24 hours volume and the bid and ask behavior around the official announcement. Third, fund movement from the exploit wallet. The three addresses holding the stolen funds are being tracked publicly. Any movement, particularly any routing through either protocol or mixer service, will generate immediate on-chain alert. Watch Zark XBT and PackShield feeds directly. Fourth, liquidity providers' behavior. If liquidity provider begin withdrawing from THORChain pools in volume, that will compress available liquidity and could create further instability in RUNE pricing through the pool mechanism. And fifth, copycat risk. Multiple analysts have flagged the possibility of follow-on attacks while the protocol defensive posture is active. The halt prevents trading but does not necessarily close the exposure until vulnerability is fully identified and patched. That is the forensic picture as of May 16, 2026. $10.8 million drained across 4 chains. Loan price down 12 to 15%. No confirmed attack vector. No post-mortem published. A protocol with a documented history of compliance adjacent controversy now facing direct targeting rather than peripheral involvement. We are watching on-chain closely. When the post-mortem drops, we will be back with the full analysis. To stay ahead of the game, watch out CrivierCockpit.com. Crivier Cockpit runs 5 intelligence briefing every day: morning daily scan, whale tracking, macroeconomics, and evening outlook. On top of that, we have our own copilot that can train you on the basic of the market. You can be able to get notified directly to your Discord server of the price changes. Stay ahead and stay alert. If this breakdown gave you clarity, share it with someone who needs the data without noise. Stay sharp. We will see you in the next one.